Hello everyone and welcome back to another episode. So today's episode we're going to be having a look at price action from Monday, Tuesday and FOMC Wednesday. We'll be having a look at price action here on Bitcoin, but we'll also be having a look at price action on the S&P, a little bit on the dollar, and a little bit on the Nasdaq. So that all will become relevant a bit later on, and I'll show you why we have a look at those indicators and how they help us to do our analysis over here on Bitcoin, right? And why they are relevant. And they are very relevant, let me tell you. So we'll have a look at that analysis a little bit later, but I think I want to start off here on Wednesday with Bitcoin. So after we had that big volatility and the move up, we created this swing high here, which was essentially a swing failure pattern. So the first thing I noticed when we created this high was the large amount of new long positions that it began to open right at the highs, right? So this is so when we see this happen, lots of new long positions opening and price doesn't move up, we start to look towards a little bit of a retracement, right? As those positions essentially become trapped up here, and we can suspect that perhaps a larger limit order was blocking price at that particular moment, stopping it from going higher. This would make sense in the context that as we were coming up here, we're actually breaching a swing high, right? But I'll show you what I mean here. So if we just go over to my post about the situation. So I just noted that a large amount of new positions opening, and you can see that open interest increasing. So you can see that they barely moved price. So right away, that is quite a bearish sign, okay? So shortly after we had that pullback, we had the swing high here. Okay, and then we created relatively equal lows. So at this point already, I foresaw a potential accumulation, but more importantly, I foresaw a search and destroy market profile. Okay, because what was likely to happen at this point, when we created equal lows at this level and we created a swing high, we essentially started engineering liquidity. So long positions who longed up here or were long in here, we're putting the stop loss below the equal lows, right? And those that were shorting here decided to put their stops above the most recent swing high, right? In order to lock in a few profits and secure themselves and reduce their risk. So over on the group, this is not hindsight. Let me show you why it's not hindsight. It's because at the time I said what is likely forming, right? And if they had access to my scalp template on Atlas, they were going to be able to see in real time exactly what was happening when the price was leaving this range. So what we can do is I can just quickly throw up the Atlas chart here and I'll show you what I mean. So this is the first instance where the price left that accumulation range. And what can you see happening here? Well, as price leaves the range, a bunch of liquidations occur. You create a small divergence and price quickly returns back to the range. Okay, this is those buy stops getting liquidated that I was talking about before. And here at this point, when price moves up through the range and above it, what do you see over on the open interest? A bunch of, so open interest is decreasing at this point, so positions are closing, positions are getting liquidated. So those are that sell side, or those are that is that buy side getting taken out, right? So those the shorts are getting forced essentially to close their positions. They buy back, which means that they increase the delta, which you can see here. And again, you have a small hidden bearish divergence as the delta continues to rise and price sharply moves down. So at those two areas, we essentially had swing failure patterns, right? So price tried to leave the range but failed to do so because there was actual lack of selling interest and there was lack of buying interest here. So why price was moving out of these areas initially was because positions, at least in this case, were being forced to sell as they were getting liquidated, and positions were being forced to buy as they were being liquidated. Okay, now I expected price to come back into a range, so this is pretty standard for a search and destroy model. After you remove liquidity both below and above, price retraces back into the range. At this point is when I was looking for signs of divergence and signs of actual absorption, right? And I found it exactly at this point. I was having a look at this in real time. So as we see here, price is coming up, starting to grind up here a little bit. But if you notice on our CVD is starting to go lower, right? And open interest is increasing. So we know that people are actually trying to sell this level right now, but they're not effective. They're not moving price. So that tells us that this area right now is an accumulation, right? So this is where absorption is happening, and here is when we expect price to move. And I actually laid this out. I just put this together real quick as I saw it happening. Uh, so this is the divergence I was looking for. As price moved back into a range, this is type A, so therefore it's the strongest type. I discuss those in my module. You can come over and have a look if you want. So this was clear signs of accumulation, absorption, and then this was price ready to move up. Okay, so I'll also show you how this might look like as an actual fractal. So I've made this fractal before, but essentially here is the idea, right? So you get this drive up where you take our short-term liquidity, and then price accumulates in here, takes out sell orders, takes out buy orders, moves back into the range, moves up through the range, taking out those buy stops there, blows them out, and then you essentially make your way a bit lower. Okay, so it's pretty much what's happening right now. The next thing I'd like to do is I'll just go to a bit of a high time frame, and then we're just going to go back to have a look at price leading up to 8:30 in the morning here on Wednesday. So this was before the big move up. So there was a couple levels that I was pointing out here. So this was the main one. Okay, so at the time I saw price reaching into this fair value gap. Okay, so it was just about at the equilibrium of this dealing range. And once again, I think I posted it on the group. Yep, so I said high volatility expected tomorrow, so make a point to mark out those high time frame liquidity levels in your charts, and also watch for potential search and destroy market profile that might develop. Yep, so I had this image up, so we had moved into that fair value gap at the time, and I was actually making them aware of this level here. So I thought that this was potentially an area for a pullback. You were going to sort of come back into this dealing range, into the equilibrium, and then probably from there make your way up. So that's why I had that that level on my chart, and that's kind of pretty much what happened. To be honest with you, this massive move, I didn't really expect that, and I was sleeping. So, but it doesn't really matter because we caught a lot of what was going on in here, which was pretty cool. So that's the main things I wanted to point out for FOMC Wednesday. But the next thing I'm going to do is I'm going to go out to a higher time frame here. We're going to go into the 1 hour. So in my last video, I had talked about price action leading up to Monday. And you'll know if you watched that video, I was talking about lower targets on Bitcoin. So the first one I had coming in at, I had an order block over here. So if I just pull that, yep, so it was this price action. So we had that order block. So we are trading around there. And I gave lower targets for this area here. So this was relative equal lows, but this was also internal range liquidity. So if you go back to that video, you'll hear I talked about these lower targets as potential areas we're going to trade into going into the week. But let's move that off the chart. So the next thing we can do is we can go over to Monday's trading, because there are a few important things I need to point out. So we had Monday's trading here. So the first area that I had looked into on Monday's trading was I was waiting for Bitcoin to trade back into that fair value gap to rebalance a bit of this price action. So a reason why this level was relevant to me was because we had on the S&P as well, going back from Friday, we had that fair value gap, which was a target for rebalancing, and we continued to make our way down from that bearish piece of price action. So the next area I was interested in, at least for Bitcoin, was a move below the swing low. So initially I thought to myself that this was a good place to take a long. But what I'd realized is that on the S&P, while we were coming down to this level, the S&P sort of stopped before running the relative equal lows in the sell side liquidity. and then sort of done this like small little rally and then traded back down. So I was like, no, that's probably not a good sign. So what I thought about was waiting for price to run the relative equal lows and the sell side liquidity. And one of the students in my group, we talked about this piece of price action, and I actually showed it to him, and I said, well, if you were going to long, it was perhaps better to long at this location, right? So why might you think that this location was a high probability long? Well, on Bitcoin at least. Well, when you had come down here into the S&P, you eventually ran those relative equal lows. Okay, so you ran the relative equal lows into that sell side liquidity. So I'll just jump over to this this piece of price action. So you'll have a look here. So as it runs down below the relative equal lows, you reach down into that sell side liquidity. And at the same time here over on the Nasdaq runs, or the Nasdaq makes a lower low, but the S&P makes a higher high. So you have that S&T divergence, which gives you a little bit of indication that this area at least is primed for a bit of a rally. So you have the S&T divergence between the S&P and Nasdaq, which gives you a lot of confidence in a trade over in Bitcoin, right? Because this might seem like a random trade. Other than the fact that you're probably sweeping these lows here, this area is relatively random. But not if you're looking at the S&P and Nasdaq, because at the same time they're just about reaching for the sell side. Okay, so you do expect at this point, you do expect a rally. So you do see similar price action coming out that level on the S&P and over on Bitcoin. So those were the two areas that I was interested in, particularly on Monday, that I thought were worth noting. So you had that intermarket relationship between the S&P and Bitcoin as they reached into the fair value gaps and they traded down. I thought at the time this was not a good long because other than for the fact that we were running sell side, there was no other confluence, and the actual long position was here, all right, because you had the S&P to back you up and that Nasdaq with the S&T divergence. So the next thing we need to do is jump over to the S&P 500. We go over to a 1 hour chart. So we lost some important levels going into Monday and Tuesday morning, but here eventually during the New York trading session, we found some support over on the S&P below these relative equal lows into the fair value gap. So this is a very high probability reversal area. If we have these two confluences, that is the swing low, right? That is then which has a fair value gap just below it. So if you have this set up, it's very high probability that you can expect some sort of reaction when price reaches there. So below us here is the Bitcoin chart. So you'll see just as the S&P is finding some support here, Bitcoin is finding its own little bit of support, just as it's reaching into that internal range liquidity marked by relative equal lows. Just have a look, note this time. So you'll see it's 3 o'clock on the 26th of July. So if you go over to the dollar, we have a look at 3 o'clock, 26th of July. What do you notice about the dollar? So the dollar is running into its high time frame resistance, okay? Just as the S&P is finding that that support into the fair value gap. So that's a nice little bit of extra confluence. So that's how you can use the S&P, and that's how you can use information coming out of the dollar to give you confidence that these lows and these levels that you're marking out are going to hold or have high probability of holding. So this leads us nicely back over to Bitcoin, where I'm going to show you a very important piece of price action. This is going to be a piece of price action that you can study and use as a template for extremely high probability reversal trades. So if you do take anything away from this video, I suggest that it's going to be this right here. So I do encourage you to take notes as well. So let me pull it up. So the first thing that we have here is we have a dealing range marked by this swing high, which takes out buy side liquidity above relative equal highs. Then we have this swing low here, which takes out sell side liquidity. Now this is the basic criteria for a valid dealing range, right? So once we have established the dealing range, we wait for a retracement back into the dealing range, right? So our optimal trade entry is located between 62 and 79%. So if price gets to this area, we can look for a reversal. Okay, so this also means that price is now in a premium market because it is above the 50% equilibrium. So another part of our criteria is that we always look for a bearish fair value gap in this case. Now we do have one here. Okay, and you can see it clearly if we went on for 5 minutes, you can see it very clear, but here it is on the 15 minute. So you have a bearish fair value gap. And what makes this fair value gap especially prominent is because of its location above relative equal highs. So you have a situation where price retraces into an optimal trade entry window, into a fair value gap above relative equal highs, and it is opposed by this order block. This is you can use this template and this criteria to frame. If you are able to frame a trade with this criteria, is extremely high probability. Like I said, if you're going to take anything away from this video, I suggest it be this lesson, and try and write down and maybe see what I said here. If not, come over to our group on Telegram. If you're interested, I'll guess I'll write the rules down for you. You can check them out. But other than that, that's all I really wanted to discuss today. So those were the important things. So we had FOMC, and we had big volatility over in Bitcoin. We had the search and destroy market profile. All right, and price moved up here, blowing out buy stops and retracing back down, just as our profile and our fractal predicts. Then we had this high probability fractal trade pattern forming here, and we just had some equally nice price action that I hope I was able to walk you through today. Other than that, if you enjoyed the video, leave a like and definitely subscribe for more content. And anyway, thanks for watching.